Good afternoon, guys. Okay. The last part of the debentures chapter is the payment of interest and writing off the discount. After this, we'll do a couple of smaller chapters so that we are on par with completing the portions. If there are any topic left, the smaller ones, I'll do it on the next Saturday or Sunday by just 1 hour topics are there. Let's start. Okay. Now, 10% debentures of rupees 10 lakh. How much interest do you have to pay every year? Guys, how much interest do we have to pay every year? 1 lakh. What's the journal entry for payment of interest? Guys, what's the journal entry for payment of interest? Correct? Now, where is the difference in debenture interest over this? Now, what happens is, guys, I want you to look into it. Whenever, as per the company law, whenever you are paying interest to the debenture holder, there is something called as TDS. TDS stands for tax deducted at source. See, if I am paying interest, if that is an expense to me, isn't it an income to another person? Right? So, what the government says is, boss, when you are deducting, when you are paying interest, you need to make sure that you're going to be reducing the interest tax from the interest before you pay to the debenture holders. So what happens is, first you will be deducting a journal entry called interest account debited to debenture holders 1 lakh, 1 lakh. Okay. Now once you are paying interest to the debenture holder, see here, you will be remitting, let's say, usually the tax rate on the interest, let's say, is 10%. So out of 1 lakh rupees interest what you have to pay to the debenture holders, you will pay him only 90,000. The remaining 10,000 rupees you will pay on behalf of him to the government as tax. Are you clear? Are you guys clear? Right? So see here, the journal entry becomes debenture holders account debit, TDS 10k to bank account 90k. So the debenture holder will only be getting 90,000, and this TDS payable you will be remitting it to the government on the given due date. Are you guys clear with this? Guys, everyone, see this question, illustration number 14, and write down your answer, what it's going to be. Now, there is something that you need to understand here is that you have interest payment 6 months. Guys, everyone do the illustration number 14. Guys, please remember that the interest, guys, there is always going to be paid on the face value, not on the issued price. You know, the issued price is what? Whether you are issuing it at par, discount, or premium, always interest will be issued only on the face value, that is par. Are you guys clear? So the interest is going to be 2 lakh. Now you are issuing it on 1st January. You'll be paying interest twice a year. That is once on 30th June and once on 31st December. Are you clear? Guys, are you clear? So what would be the interest on 30th June and 31st December? It's going to be 1 lakh and 1 lakh. So what's going to be the first journal entry? Interest to debenture holders 1 lakh, 1 lakh. Debenture holders 1 lakh. To TDS 10,000. To bank 90,000. Are you clear? Guys, are you clear with this? This is going to be on 30th June and TDS to bank. Are you guys clear? Same thing will continue for 31st December also. Interest to debenture holders 1 lakh, 1 lakh. Debenture holders 1 lakh to bank 90,000, to interest 10,000, then TDS to bank 10,000, 10,000. End of the year you'll be transferring interest to P&L account. That will be interest to P&L account. Sorry, profit and loss account to interest account. 2 lakhs, 2 lakhs. Are you clear? Guys, are you clear? Sir, it's a income tax rule, sir. I am not trying to pass anything. It's the income tax rule. Government has told that you have to deduct TDS and only then make a payment. Government wants to avoid people running away from taxes, so they want you to deduct the tax. That's why, sir, I have nothing against it. Government is telling, I am doing it. Sabrish, you have to do it for all the 5 years, sir. Correct. Only the last year, guys, see here. There are two entries I'm doing. The interest entry will be all the same for first year to 5 years. Now I'm only doing the issue entry and the redemption entry. Look into it. When you're issuing debentures, what's going to be the journal entry? Bank account debit 18 lakh to debenture application 18 lakh. Then debenture application account debit 18 lakh to debentures account 20 lakh discount account 20 lakh. Now guys, see here, they are saying debentures were to be redeemed 5 years 5% premium. That means you have to record also the premium entry to premium on redemption 1 lakh to loss on issue 1 lakh. Are you guys clear? Guys, are you clear? This is going to be my entry at the issue. Now guys, I want you to understand, this is something I want you to see here. The second entry what I passed, debenture application, and I want you guys to carefully understand what I'm doing. Debenture application account debit 18 lakh, loss 1 lakh, discount 2 lakh to debenture account 20 lakh correct. Now this loss and discount can be combined and written it as 3 lakhs. That is first one. Now the second thing that you guys have to understand is this loss has to be written off every year. This loss of 3 lakhs has to be written off every year. I'll be teaching you this. Then what is going to be my entry on redemption? See, on the fifth year, when you're paying back the debentures, what is going to be the journal entry? Debentures account debit 20 lakh, premium on redemption account 1 lakh, to debenture holders 21 lakh. Are you guys clear? So the first entry credit gets cancelled by debiting it. Are you guys clear? Guys, are you clear? So whatever I did the journal entry here, that is debenture application to debenture holder to premium, that gets reserve or clear reversed while paying it. So then the journal entry becomes debenture holder to bank 21 lakh. This is the entry on redemption. Are you guys clear with this? Now the last part is this 3 lakh discount, what is there? This 3 lakh discount, what is there? What was my journal entry for discount? Guys, again remember this debenture application 18 lakh, discount 3 lakh, to debentures 20 lakh, to premium on redemption 1 lakh. This debenture is issued for 5 years. So since this discount is a loss, because of the matching concept, I will write off over a period of 5 years. Or if there is a security premium, I write it off against it. Are you clear? Now, what is going to be the write-off entry? Every year, you will be passing an entry as profit and loss account debit to discount on issue of debentures 3 lakh divided by 5, 60,000 rupees. This is the entry you have to pass every year and for 5 years. For every year end for 5 years, you will have to do this. Are you guys clear? Now, see, this is one part. The second part is, see here, debentures completely were redeemed 5 years. That means this 20 lakh together was paid off in the fifth year. There are some cases where redemption happens. There are some cases where the redemption happens equally. Now, what does it mean? Let's say you are having 10 lakh. When they say debentures are redeemed equally over 5 years, that means every year you'll be paying 2 lakhs, 2 lakhs, 2 lakhs, 2 lakhs, 2 lakhs. Are you clear? In the previous question, the entire 10 lakh was paid in the fifth year. Here you are going to be redeeming it 2 lakhs every year end. Are you clear? Clear? Now in this case, how are you going to write off the discount? Okay, guys, see here. Let's say there is a discount of 1 lakh rupees on debentures worth 10 lakh. And debentures have to be redeemed in 5 years equal installment. Now in this case, how do we write off this loss of 1 lakh is the question. So you need to do this table first called outstanding at beginning of the year. Year 1, year 2, year 3, year 4, year 5. Now the first year, how much debentures you had? 10 lakh rupees. End of 1 year you paid how much? Guys, end of 1 year you paid how much? You paid 2 lakh rupees. So you're left with what? 8 lakh rupees. Are you guys clear? So second year will be 8, third year will be 6, fourth year 4, final year you left with an opening balance of 2 lakhs. Are you clear? So every year end you're going to be paying off what? 2 lakh rupees. Are you guys clear with this? Now find the ratio, go from top to bottom: 1, 2, 3, 4, 5. Correct, Rishabh. Hey, Venkatram. Uh, at the beginning of every year, you have to make sure. This is not maths paper, go in this accounting paper. Working notes carry marks. Okay, guys, done. Now, how do I write off C here? What is the total of it? 5, 9, 12, 15. So, first year, the discount to be written off will be 1 lakh into 5 by 15. Second year, the amount to be written off will be 1 lakh, which is the discount portion, into 4 by 15. Third year discount to be written off will be 1 lakh into 3 by 15. Fourth year will be 1 lakh into 2 by 15. Fifth year will be 1 lakh. Are you clear? Sir, maths paper is an MCQ paper, sir. MCQ paper, how do you get working marks, sir? Either you get it right or you get it wrong. How is there a working marks for a MCQ paper, sir? Guys, are you clear? Done. Guys, we are ending the stream. I'll be sending you another link where we'll be doing the chapter called non-profit organization. I'll send you the link. Just look into your WhatsApp. Thank you, guys. Thank you so much.